like to welcome everyone who's joining us to today's session of the NEO Spotlight. And we're going to put the spotlight on a very, very interesting organization, Ether Capital. Ether Capital, I think it's fair to say, has been and is spearheading Canada's ambitions in the entire Ethereum and Web 3.0 space. And we have the pleasure to have with us the CEO of Ether Capital, a thought leader in this space, Brian Mosoff. Brian, great to have you with us.
Thanks for having us here today, and always happy to chat crypto, Ether Capital, and all that's going on in the digital asset space.
Now, it's a true pleasure to have you, and to the audience, what I would like to say, if you have any questions, feel free to leverage the Q&A box and put your questions in there, and we'll make sure, or I'll make sure that I ask them to Brian. But Brian, let's maybe start with a bit of a holistic view of the entire digital asset space, and I think you and your organization have been living the early heydays. You have lived what we call the crypto winter. You have lived the resurgence, and we're looking now at an incredible set of new developments and opportunities. Think about not only what was at the beginning of Bitcoin and Ethereum, but we're talking about all kinds of new protocols, new technologies. We're talking about decentralized finance. We're talking about NFTs. Where are we? Where are we in today's space? Where is the promise? Where do you think the promise is, and what will that promise be of this entire new asset class?
I think you can bucket. There's kind of a few different eras that have taken place here. The first is in the early days, so 2009 until maybe 2018 or 2019 was really the development of protocols. So you had Bitcoin come about, so it invents an asset class. Ethereum comes around a number of years later and invents this idea of a smart contract platform, something that's more programmable and more flexible. But it wasn't clear how any of these technologies would really be used. They were really experimental and pushed off into these niche communities. And then in kind of that 2019 and 2020 era and beyond, we started to see the emergence of ways that people would leverage this technology. And so on Ethereum, it was stable coins. And then we also saw the emergence of the metaverse and DeFi, decentralized finance. NFTs have come about. And so now we're starting to see verticals emerge that are industries on their own. And they live on top of these protocols. They live on top of these standards. So that's really interesting to see that there's real use cases that are beginning to emerge. There's almost $200 billion of tokenized USD that now lives in these worlds, and businesses like Visa can start leveraging that into their networks. And so I think now where we're at is, now that we're seeing the verticals, we're entering this new phase of the mainstream figuring out what role are these technologies going to play in society. And you and I were just chatting, before we started here, that governments are at this crossroads of figuring out these things are not small anymore. These networks are not little nascent pieces of technology. They are going to influence the geopolitical landscape, abilities to sanction countries, abilities for citizens to make payments and interact and coordinate capital with one another that may be outside of their control. And so I think we're entering this new era of, it's going to be very interesting for the next 5 years to see not only the industry growing as kind of this self-composed community of developers, but also how is it going to reshape traditional finance? How is it going to reshape politics and government? So I think we're entering this third phase in the evolution of cryptocurrency and digital assets.
Yeah, and when I look at it, you cover this here at a high level. You talk a bit about the evolution and the emerging trends that we see, the new industries that are developing within this space. But if I look at it as a potential participant, as a potential investor, because lots of people invested in some of those protocols or invested in some companies, what should I pay attention to? How should I look at that? Because when I look at my chart, I got my chart here in front of me that shows me Bitcoin and Ether and a number of other protocols that are out there, and I'm not talking now specifically about companies. It's still darn volatile, and it goes up, it goes down. like we see again a bit of strengthening for the moment. Like how should I think about all of that? Should I just sit back and wait, or should I just invest and wait, or should I just ignore?
I mean, I think my first reaction is I don't think any investor should completely ignore the space. There's clearly something happening here that's here to stay. And I like to focus on infrastructure and developers more than price. I think that that's really important because the alpha was around in 2018 when the beginning of that 2.5 year bear market hit, and you saw Bitcoin go from 20,000 all the way down to 3,500, ETH from 1,400 down to, I guess, $80 at the low.
Yep.
And the alpha there was the hackathons didn't stop happening. The institutional infrastructure around custody, some insurance products, creating structured products around ETFs, closed funds, all of that stuff was being built in the background. So if you can abstract away from the price, there's obviously something happening here that's really exciting and likely here to stay. And so investors who can take a 5 or 10 year time horizon on this bet, I think it's important to include in a portfolio. Then the question becomes, which assets are appropriate for them? You have blue chip assets like the Bitcoin and Ethereums that have been around for a number of years. They clearly have network effects, large communities. You can expect that those will play an important role in the next evolution of protocols. And maybe there's going to be a number 3 and 4 and 5th player who emerge that will be equally as important. And so investors can decide, do you start with the 1s and 2s? Or do you try and look for even more asymmetry, but more risk and play around with DeFi protocols or NFTs and metaverse? That's certainly higher risk, but potentially higher reward. I would caution investors who feel a lot of FOMO to go down that rabbit hole right out of the gate and first do reading and homework on why these assets exist in the first place. What problem did they actually solve? Why do they sit in the number 1 and number 2 positions? And then start building a position in a portfolio.
It's extremely interesting what you say, because what you're telling us, what you're telling everyone, that is, maybe spend a little bit less time looking at the price of Bitcoin and the price of Ether and the price of those various other protocols or new protocols that are emerging constantly, but think about why are they there and what are the use cases and the businesses that they enable. I think that's a bit your message. Now, that entire attitude that people have, to looking at Bitcoin and Bitcoin more than anything else, because it has been there since day one. What would you tell them? Like, what is your reaction to them? Like, I can give you my thought on that, but I'm more curious about yours.
Sorry, what the reaction to what specifically, or what attitude?
Well, the fact of continuously looking at Bitcoin, the evolution of Bitcoin, and having all the, in fact, behaviors and investment driven by the price of Bitcoin, because that is something that I still see. I see that everything is extremely correlated to Bitcoin in this entire space, despite the entire progress, the entire revolution, that you have been describing earlier.
So Bitcoin, there's no question, is the biggest by market cap. It's the biggest brand. There's the most awareness around it globally. You're right. These assets are highly correlated to one another. But I think over a 5 or a 10 year period, you'll see a decoupling of things like Ethereum to Bitcoin. The value propositions are very different. One is kind of acting as this store of value, speculative digital gold. And then you have something like Ethereum that's powering a host of activities, really exciting activities. And they shouldn't really be correlated, but I think that mainstream investors currently bucket these assets into the same group because they all sit in this new frontier of technology, digital assets. They're not sure how governments are going to react to them. They're not sure what regulation and policy is going to look like towards the space as a whole. And so they are correlated for now, and they are going to remain to be extremely volatile, I think, for the foreseeable future. These things come in waves. There's bear markets that were around in 2012. There was one in 2014 to 2016, 2017, and then 2018 to 2020. So it's important for investors to really zoom out and say, abstract away the price, focus on the technology, focus on the asset class as a whole, and ask themselves questions like, do you believe that the world is moving more towards further decentralization, more peer-to-peer models, more web-based systems, perhaps monetary policies that are issued by algorithms or software, rather than central banks? And if you believe that the world is moving more in that direction than less, then I think that this is an important asset class to pay attention to.
Yeah, and I think it's great, to underline that key point that you make, that is, look at what it's being used for, and I believe indeed that we need to see less correlation, and it will come with more awareness and people better understanding how it is being used. What are, in your eyes, the big hurdles today that are slowing the adoption down of the digital assets? What are the things that you see? And we can of course talk about regulators, the lack of regulation, or sometimes maybe going a bit too far in certain areas. But what are the big hurdles that hold us back?
So I do think that volatility scares a lot of
Hmm.
investors. Most investors have never experienced the level of volatility of this asset class before, and so that's a scary thing. So it does require a lot of conviction for investors to come in and turn off their stomach to that volatility and take a very low time preference in the bet. So that's one thing. I don't know how you overcome it other than through education and constant awareness and research, and understanding that the community or the industry in terms of infrastructure is not shrinking. The price may go down for some period of time, it could be a long period of time, but the infrastructure isn't shrinking and going away. I do think that users that want to hold the assets themselves require a fair amount of sophistication in terms of the technology that's available or that they're going to have to interact with. Getting self-hosted wallets, whether it's software-based or a USB key, that requires some technical skill, and many
Hmm.
people may not be comfortable with it. One good thing, though, about the space is I think we've seen, different than the 2017 bull run to now, we have structured products that exist. In fact, Canada has led the way and did the world's first Bitcoin and Ethereum ETFs. And for those investors that wanted directional exposure to the asset class and didn't have an access point prior to that, now they do. And so you can think of the space as having this barbell of how do people want to participate? And there's the technology enthusiasts and the crypto natives over here that had access points since the beginning. And then on this side, you had a different group of people, my parents' generation, my grandmother, well, my grandmother still doesn't get Bitcoin, but, she hasn't had an access point before. So there's lots of challenges still to the space. I think it's also a very cloudy space. People feel like they've missed the boat and they're looking at new assets. There's lots of pumpy and if I can use the word scammy tokens that are coming out constantly. And so it's noisy, and isolating that signal from all the noise is very challenging to new investors who don't really know where to go. And that's why I keep pointing back to that initial statement of do that homework on why does Bitcoin exist? Why does Ethereum exist? What makes those two assets different from one another? Important assets in the space, cornerstones in the sector, and start there before you dive into the Shiba tokens and the Doge coins and the random profile picture NFT projects. And this is specifically why we set up Ether Capital, to focus on an asset that we believed was going to be an important part of the next generation of the web.
Yeah, and that is definitely a piece I want to zoom in a bit more. What you guys are doing very specifically, but you talk about volatility that creates fear. Absolutely. You talk about education, not understanding, being exposed to opportunities that you didn't use the words that I would use, that are being pumped and dumped in markets, and that need to be addressed. What's your view on the behaviors of the regulators? What's your view on the behavior of the central banks? And you touched already earlier a little bit on governments and their longer term view on matters. But what is your view on maybe the regulatory framework for the moment?
I mean,
or
high
lack,
level,
or lack of.
high level, I feel really bad for the regulators. This is a brand new asset class with its own lexicon that is moving 100 miles a minute. So just when they've understood Bitcoin and Ethereum, now there's DeFi, there's NFTs, there's metaverse, there's fractionalization of NFTs happening. I mean, the space is getting really, really big, faster than they can keep up. So it's a very challenging job. I do think that some things we've done well in terms of regulation and policy in Canada. We have created frameworks for our platforms, the local exchanges, to get registered and be compliant. Perhaps it took longer than we had hoped, but we did get there. and they are going to be able to list new tokens. But there's still a lot of tension around new activities that investors want to participate in terms of maybe they want to participate in lending or staking to generate yield off of their assets. What appropriate frameworks are going to exist for the platforms to offer that out to their customers still remains to be seen. And regulators and industry are going to have to work together to figure out how to offer those services. I do think that governments are now waking up to that this isn't just a regulation issue. This is going to influence geopolitical issues. We saw what happened with the Freedom Rally in Canada. Crypto enter the narrative. Crypto has entered the room, as people on Twitter might joke, because this technology is going to play an important role in the future of finance. And so regulators, government, and industry are really going to have to come together to figure out what appropriate policies are going to exist, what those frameworks are going to look like, while not being left behind. And this is something that I'm personally very passionate about. I have a front row seat into this industry. I've been in it for a decade. It's exhausting. But I see now, I was just at ETH Denver, a big hackathon conference, and there's over 10,000 people who are flying in from all over the world that want to participate in the space. And the space is going to continue to grow orders of magnitude bigger than it is today. And the questions that I have for regulators, for government, for Canadians who don't understand the technology is, if this is really going to be the future of finance in the next generation of the web, what role do we want to play in 10 years from now? And there's a real risk that if we get this wrong, we overregulate, we push it aside, we protect the existing institutions and capital market structures that we have. I don't want to wake up in 10 years as a Canadian and go, yep, this whole opportunity just passed us by because we didn't come together as a group and say, we need to find a way to have a seat at that table. There's a role for us to play here. Ethereum was invented in Canada. A lot of high profile projects and developers are Canadian. It's something I'm very proud of, but I want to make sure that we get this right. And so I think we're at a really interesting intersection of how this is going to play out, and it's going to influence the next 5 or 10 years. A lot of how the country functions. There's a lot of taxes to be collected from people who have done very well, and we need those taxes. We have a large amount of debt, and so this is important for this industry not to get marginalized and pushed aside, but to play a pivotal role in Canada's success.
Yeah, and we have to come together. I think that's a very important message. It's not about pointing in the direction of the regulators, because that is often what happens. I think what we all need to understand is that they need help. They need not to overreach in what they do, but they need help, and they need parties and partners they can work with to understand. Good news is I think we have very good attitude around innovation amongst our regulators. But to your point, it's tough. It's tough.
I would add to that. If we think about Canada versus the US, some other things we've done well. We have an exchange like the NEO. By the way, this is not actually meant to be a plug. This is a genuine compliment I'm giving you now. We have an exchange that is welcoming these new businesses that are experimenting, whether it's something like Ether Capital. You took a real risk on us early on in 2018. There's a host of other crypto-related businesses that are listed on your exchange. The US doesn't have that same welcoming set of platforms, exchanges listing or helping public companies exist in the sector. We also have, I think, a regulator that has been more collaborative with industry to figure out structured products to help some of these companies get listed. And that's great. We need that dialogue. In the US, we're seeing a lot of tension around the Biden administration, the SEC versus the industry, a lot of threats coming out of the SEC against the industry that things might be securities and there's going to be issues with these exchanges. And that's not collaborative. And so I think we have done a lot of things right in Canada, and we just need to keep going and push harder to continue to lead.
Yeah, no, I think you're absolutely right. I think, very honestly, that we are a country of innovators, and we've seen it in this space, and we see it in other areas also. And the challenge is then, how do we turn that innovation in true success that we can continue to benefit from, as a community, as a country over here, and that is an opportunity that we definitely don't want to miss in this space. But Brian, let's zoom in a little bit on Ether Capital now. So Ether Capital, as you said, formed I think in 2018 and listed probably let's say 6 to 12 months afterwards. So very exciting. And I remember the first days and the discussions with the regulators that even we participated in. But tell us a bit more about your value proposition. Tell us a little bit more about, I think we know where your focus is, Ethereum, Web 3.0. But tell us a bit more about your approach
was the name
and
the giveaway?
Your portfolio.
So we had this thesis very early on that Ethereum specifically was going to be a very important asset and very different in terms of value proposition than Bitcoin. And so the company formed to create the first access point in the capital markets that was focused on Ethereum and all the activity that we believed would come from that protocol. And at the time, there were no structured products. There was no way to safely and efficiently access exposure to the price of Ether outside of buying it and holding it on, at the time, at probably an unregulated exchange, or holding it in a self-hosted wallet and taking a large amount of risk. So version one of this company was to go out and acquire a large amount of ETH, and then over time find ways to make that asset productive, to generate yield on it and turn it into an operating business. So the first thing we did is we went out and bought a large amount of Ether, and now we are transitioning into a point where we can take that Ether and do something called staking. And staking, very high level, is a new form of mining or validation on these networks. So we're going to help process those transactions and all the activity that's taking place, and we're going to receive a reward for that. And it's a really advantageous position to be in, to hold a lot of Ether, because if you can hold, for a company like us, $100 to $150 million of Ether and generate a 10% return, potentially when the transaction fees kick in here, it's $10 million of cash flow to a business that has very low drag. And so different than the ETFs, different than the closed funds, we're not a fund. We're set up as a corp, and that was by design. We always believed that structure would allow more flexibility to do things like stake, to keep a drag that's substantially lower. It's not a 1 or 2% MER compared to, let's say, some of the trusts that exist in the US. And so having this fixed burn and being able to build out a team filled with technologists, we just brought in a world-class CTO recently, allows us to take some of those revenues that we're getting from staking and start building other tooling for the space. So I think that there's a lot of opportunity for a company like Ether Capital to help build out infrastructure in the space while creating a lot of value for shareholders, while at a minimum just tracking the price of this incredible asset that we think is going to be very pivotal to the future of all of this really incredible activity.
But you are in fact, looking at your portfolio, you are really moving forward in line with your vision, because I see you, starting indeed with the investment in Ether, but then you do the staking and you start to invest in some other companies, part of the infrastructure. You mentioned how important the infrastructure is. Can you tell a little bit more about the other components of your portfolio? Because I think it's important for the investors to understand that you are starting to diversify.
We do have a heavy focus right now on ETH staking, but one of the really exciting pieces in our portfolio is a company called Wire. We always believed, kind of what I was saying earlier, that the way to play the space is really to follow the developers and bet on all of that developer activity. And so Wire powers an on-ramp basically solution to go from a credit card or debit card direct into crypto. And so it's not a retail facing exchange like most of the platforms people are familiar with. Instead, it's a widget inside of a lot of browser-based wallets, a lot of iPhone-based wallets, where when you want to buy an NFT, when you want to participate in DeFi, rather than signing up on a centralized exchange, getting verified there, connecting your bank account, this is much faster to just support these developers who want to create some type of application to allow users to go direct from their dollars into crypto.
Yeah.
So a good example of this would be, just one thing, because it'll help people understand. MetaMask is the biggest browser-based wallet that's used in the space. A lot of the NFT activity is taking place with MetaMask acting as that interface. And when you click the buy button, if you wanted to just buy $500 of ETH, it's Wire that's going to pop up and power that transaction. So when we talk about infrastructure, that's the kind of infrastructure that we want to participate in. We believe that is very important infrastructure for the space, and also to own those pipes, the same way that we believe that Ethereum is the pipes for all the activity. We don't want to play the NFT space or the metaverse space We just believe that all of that activity is going to take place on this global clearinghouse, which is Ethereum, and we want to own those pipes, those rails.
I cannot disagree with that, Brian. That has been the vision of stock exchanges for centuries. That is being at the center and being the piping of the system. But I found it interesting for you to talk a little bit more about why, because you're also showing here, how real it is and how close it is to us, and how those bridges are there, and that infrastructure that allows you easily, from the world that we live in today, to get access to that entire new space that is developing. So it's not something that is far out, and you have to be, some genius from a technology perspective to participate. All those bridges are being built, and you guys are part of that. EtherCap as an investor, how should I look at the organization as an investor? And I think, by the way, it's probably worthwhile here to repeat a few things about the staking, because I think that's a message that your investors really need to understand. It's a very strong message. But how should I, as an investor, look at EtherCap?
I mean, I think you should look at us as probably the best way to participate in Ether exposure or crypto exposure as a whole. Again, as I said, we're not looking to buy NFTs and metaverse exposure. We believe that the plumbing that's going to power all that activity is going to be Ethereum. So Ether is the thing that you want to own. There's still a huge amount of asymmetry in that bet. We see orders of magnitude long-term of potential for this to change more activity, to have significant price appreciation. And so the question is, well, why hold Ether through Ether Capital instead of something else? So the first thing, as I mentioned a few moments ago, we are not a closed fund. We're not an ETF. We don't have a fixed management expense ratio. Mm-hmm. And so we're the lowest cost of ETH exposure in the capital markets, for one. The second thing is that because of our structure, we're able to do things like stake. We can generate a 5 or 10% return on our ETH balance, which you can't do in any of those other funds. We have no intention of paying it out as a dividend. We think that it's important to be a net accumulator of ETH. We want to increase our ETH balance over time. And then we'll also use some of that set of revenues to build other unique IP to the organization that we could then license out or sell to other businesses. So I think that there's a lot of asymmetry in what we're doing. We're not trying to compete with a closed fund. We think that there's more work to be done to get our hands dirty, to be members of the community in the space, and participate in all the really exciting development, while being a big believer in the price of ETH long term.
Yeah, well, those are, of course, the two core elements today of your portfolio. But I would personally add to it, Brian, a team, an incredible team. The quality of your team is absolutely fascinating, and I think that's always something very important for me when I invest in something. I look at the people also, and when you look at some of the other things that are today maybe small in your portfolio, but where you're going, where you're investing, and we talked about why earlier, it just shows the vision. It just shows a clear view on how this world is developing and where you need to be, and I would definitely underscore that also. So last question maybe for you, because it's so fascinating how quickly these calls go by. But last question for you. I'm looking at I'm doing what I said earlier I shouldn't be doing, but I'm looking at the price of Ether. I'm looking at your stock. I've got all of that in front of me. I'm a lucky man. And what would you tell me with everything that's happening in the world, with the volatility? Should I wait a little bit, or should I make decisions? And I'm not asking you to give advice, because neither you or I should be giving advice here, but probably more asking you, is this a moment to make decisions? Whatever that decision is, if you know what I mean. But I will not push it in any buy nor sell advice.
So, ditto here. I can't make securities recommendations, but I do think that investors can use this as an opportunity to start researching the space and going back to what the value proposition is of the asset class as a whole, where it fits into the world right now. If they already have exposure to the space, maybe they want to reshuffle how that exposure sits, and maybe they don't want direct token holdings in their portfolio, and they want to buy a structured product. maybe they want exposure to someone like us because they want staking yield.
Mm-hmm.
And so I don't think you can never time this market. I don't think that ever works. It's just way too crazy of a space. But I think it's a unique point in time where new investors or existing investors can start really hunkering down and saying, where is this going to be in 5 years? Where is this going? And is now an appropriate time to wade in? Maybe they dollar cost average. Maybe they buy a host of cryptocurrency stocks plus some direct tokens to make up that piece in their portfolio. So I think it's a really exciting time. And there's a lot of education still to be done. And companies like ours put out a newsletter. Everyone can find us on LinkedIn, Twitter, email us. I think it's a very collaborative space, a really exciting space. And we want to help new investors understand where this is going, because I don't think that it's an asset class that you can just say, well, I read for 5 minutes and I'm going to go out and spend a few $1,000 buying some exposure. It does take time and understanding and letting those concepts sink in, and then deciding, I think that this is an important asset. It's an important asset class. And then how do you play it and what's most appropriate for their needs and their portfolio structure?
It's a long-term play. I think that is the real message. And I think what people indeed should be careful about is don't try to play short-term day trading games on it. It is a very volatile market, and you have to think about what it means and what it will mean in the long term. And the only example that I would give to people is think about the early days of the internet. It's in a certain sense very comparable to that, and we know how that has developed over time. But again, we're not here to give any advice, Brian. And I would like to thank you. It's always such a pleasure to talk with you, Brian, and listen to you, because you really help demystifying, some of that digital assets world that for many people is still, very complex. They're scared. We talked about it. They don't understand it fully. And I would say I hope that we're going to see you a lot, talking more, educating, helping people to understand, because that need is there, and that is going to be, as we said earlier, one of the big drivers of the growth of this entire industry. Brian, a very big thank you. A big thank you to our audience who participated today, and I would love to have a chat with you again. At the next stage in the evolution of the industry and in the growth of your company. Thank you, Brian. Have a wonderful day.
Thank you for having me. Hope to see everyone soon.